Hi, welcome to another video. So Warren Buffett received more than $5.2 billion in dividend income from his top 7 dividend payers in 2024 alone. And many of you will know Warren Buffett as one of the most successful stock market investors in history and one of the wealthiest men on earth. So that tells you something about the impact or the importance of dividends in creating wealth. Bank of America paid him more than $1 billion in 2024 alone. The second company was Occidental Petroleum, which paid him more than $903 million. Chevron, another petroleum company, paid Warren more than $801 million in dividend income in 1 year. The fourth company is Apple. In 2024, Apple was also the largest position in Berkshire Hathaway's portfolio, and Apple paid Warren Buffett more than $789 million in dividends in 2024. The fifth company, which is also one of his longest held positions, is Coca-Cola. Coca-Cola paid Warren Buffett $776 million dividends in 2024. The sixth company, Kraft Heinz, paid him more than $521 million in dividends. And last but not least, American Express, yes, the credit card servicing company, paid Warren Buffett nearly $425 million in dividends in 2024. For a grand total of $5,255 million in dividend income in 1 year. More than $5.2 billion in dividend income from 7 stocks for one company in 1 year. That is life-changing, even for a business. Now, perhaps individuals may not be able to get that kind of money because this is a business, but he started small because when Warren Buffett started investing in Coca-Cola, for instance, in the late 80s, the price of Coca-Cola was only so much. But today he earns more in dividends from Coca-Cola than the original investments he made in Coca-Cola. Stop and think of that. So think of Warren Buffett the next time someone says dividend income as so immaterial they amount to nothing. Now, another well-known dividend investor is Kevin O'Leary. Here, let's watch a little clip on what Kevin has to say about dividend investing.
And this is just a fascinating, one of the things in life that it just comes from a unique experience. My mother used to take a third of her paycheck and put it into large cap dividend paying stocks and corporate credit back in the early 60s. And when she died, this portfolio had existed for 50 years. And as an executive, the first time I got to look at it, she'd hidden it from both of her husbands. It was amazing. If dividend paying stocks and corporate credits over 50 years, you can't find an index that beats that. And so when I started to do some research, I found out one interesting fact that changed my investment philosophy forever. Over the last 40 years, 71% of the market's returns came from dividends, not capital appreciation. So rule 1 for me is I'll never own a stock that doesn't pay a dividend, ever. What's the value of a stock that never returns capital to its shareholders? I don't know. Because the only way you can make money is if somebody else is willing to buy that position at a higher price for some emotional reason, perhaps, or for some, foresight that maybe the company will return capital one day. And I think of, when you learn as an investor over multiple decades is the only thing that matters is free cash flow. That's it. There is no other reason to own a stock. And with that philosophy, it brings you into a place where you focus on a company's ability to generate incremental cash flow, because just owning a dividend-paying stock is not good enough. Because, let's say we find a stock today that's paying a 3% dividend yield, and tomorrow, because its forecast for sales get cut in half, the stock drops by 50%. Now it's yielding 6%. I don't want to own that stock either. When a company comes public, I won't own it either. It's got to prove to me over multiple years that it can continue to generate cash before it even fits into what I'm doing. So I'm really boring, and I like it that way. I mean, I can't even imagine buying a stock that doesn't pay a dividend. Why would you do that? What would be the reason you would do that? I don't get it. So to me, that means about 28% of the market, to me, is just speculation. A stock that doesn't pay a dividend is a speculation. It's not an investment. You remember back in the late 90s, I'll use one example, Toys.com. I was an investor in Toys.com. I went to zero, never made any money. And I grew a little 4-inch Charlie Munger on my shoulder when that happened. And he appears, you can't see him, but he's on my shoulder every time I'm getting pitched a deal like Lyft or Uber. And Charlie says only one thing. If it has no cash flow, just say no. And I have listened to my little Charlie ever since the late 90s, and I've been right 100% of the time. This company is valueless. It doesn't have any cash flow. It's a speculation. It's no different than putting your money down on red or black in Vegas than giving money to one of these losers.
Or like the way I like to think about it is like setting up a storefront and, selling dimes for a nickel. Might as well be doing that at this point, right?
Now, okay, so those are two individuals who are passionate dividend investors. Let's look at industry, the technology sector, for instance. In 2024 alone, 3 big tech companies started paying dividends for the first time. Alphabet, Meta, and CRM decided to declare and start paying dividends for the first time in 2024. Just in case you didn't know, a lot of companies in the tech sector do not pay dividends because they take their net income, the profits, and reinvest that money in the companies for faster growth because technology is very fast-paced, or they use the money that they make, the net income, to acquire competitors to grow bigger. So, seeing that 3 large tech companies decided to declare and start paying dividends in 2024 speaks to the significance of dividends to the investment world, both to the companies, but especially to investor sentiments. Because as Kevin O'Leary just indicated, what do you get by putting money in a company that does not pay dividends, especially if at the end of, say, 15, 20 years, it goes bust? I think of BlackBerry, for instance. BlackBerry is still in existence today, and the share trades for about $5 a piece today. But there was a time when BlackBerry traded for about $150 a piece. In 2024, understanding the power of dividends to investors, to attracting investors to their stocks, 3 large tech companies started to pay dividends. Technology companies are also embracing dividends because dividends are a reflection on the financial health of a company. Otherwise, it's all considered what? Speculation. Because dividends are paid out of the net profits of a company, companies that are able to pay out dividends are generally considered to be, profitable businesses. Now, here's another statistic in favor of dividends. Another impressive statistic about the impact of dividends on the total returns of the stock market. According to Fidelity Investments, dividends have produced about 40% of total returns of the S&P 500 over the last 90 years. That says a lot about the power of dividends on the growth, not just of individual portfolios and companies, but also the entire market. As you can see, the impact of dividends cannot be overstated, both to investors and to total returns on the stock market. Now, as for me, if you're a returning viewer, you'll know that I am a passionate dividend investor, and I've been sharing my investment journey with you all on this channel. My first dividend income in the fall of 2021, almost 4 years ago, was less than $2. Now, I can tell you that for this year, 2025, I expect to receive over $6,000 in dividend income. So this has been just less than 4 years. I often ask myself, imagine if I started investing in this portfolio 10 years ago or 15 years ago, how far I would be. Receiving dividends and reinvesting dividends in my portfolio is part of the reason why my portfolio is growing so fast. Over these 4 years, I have received and reinvested over $9,000. So clearly you can see that dividends are not just a way of building cash flow, but also of building a larger portfolio and growing wealth in the stock market. Now, for the benefit of newer investors, what is a dividend? Dividends are basically a company sharing their profits with their shareholders. If you own shares in a company, a publicly listed company, then you're a shareholder of that company. And if that company pays dividends, because not all companies pay dividends, then you will receive a dividend payment. Dividends are a form of passive income, the easiest type of passive income if you ask me, because all you have to do to receive dividend payments is to invest or buy shares of a company that pays dividends. And so when they declare and pay dividends, you will receive a cash dividend. Now, note that not all companies pay dividends. Here are some other things to note about dividends. Not only do some companies not pay dividends, dividends are not guaranteed. Dividends are paid at the discretion of the board of directors of a company and can be discontinued or reduced at any time. We saw this in 2020 during the COVID pandemic when Disney decided to discontinue its dividends because the whole world was under lockdown and they were not having cash flow coming in. So it's important to note that dividends can be discontinued at any time. That's why it's very important that if you're looking for cash flow or income from the stock market, make sure that you've done your research to ensure that the companies you're investing in are stable, dependable, well-established dividend payers, understanding that dividends can be discontinued or reduced at any time. The other thing to note about dividends is that many companies tend to pay their dividends on a quarterly basis, so once every 3 months. However, there are companies that pay dividends on a monthly basis. For instance, REITs. REITs are real estate investment trusts. They are generally required by law to pay dividends or distributions on a monthly basis because REITs are in the business of operating income-generating real estate or properties. So, if you're looking for monthly dividend income, consider investing in REITs. Otherwise, most companies pay their dividends on a quarterly basis. But there are also companies that pay dividends twice a year. Disney, for instance, pays dividends twice each year. Now, if you enjoy content like this, please consider liking this video and subscribing to my channel. It helps the channel grow. It also encourages me to continue making these videos. Don't forget to share with family and friends and hit on the bell icon so that you're notified every time I post a new video. Now, dividends are only one way for investors to benefit from the stock market. There are other ways to benefit from the stock market, of course, for instance, through capital appreciation. Capital appreciation, for instance, is the difference between the purchase price and the sell price of a stock. So you buy stocks and hold them for a certain period of time until they increase in value or price. Then you turn around and sell them for a profit. That is benefiting from the stock market through capital appreciation. Then there is also benefiting from the stock market by receiving interest income. If you invest in bonds, for instance, bonds do not pay dividends, they pay interest. So you can invest in bonds and receive, interest income from the stock market. So there are multiple ways of benefiting from the stock market. However, dividends tend to be one of the most popular ways of benefiting from the stock market because of the stability that dividend-paying stocks have, because dividend-paying stocks tend to be the large, mature, well-established companies that have been in the market for a really long time. Think companies like Procter & Gamble, Johnson & Johnson, Coca-Cola, the Royal Bank of Canada, AbbVie, Enbridge. Those are some of the quality dividend companies, dividend aristocrats. So basically companies that have proven their ability to continuously pay and grow dividends over a really long time. Now, I know that I repeat myself when I say that I'm a passionate dividend investor, but from the get-go, my goal for investing in the stock market was to create a new income stream for me that will allow me to replace my employment income and quit my job. I say this to say that I have received some comments from viewers that have been expressing disapproval about dividend investing, saying dividend investing is a gimmick and that I should be encouraging viewers to invest in the S&P 500 or in growth stocks instead. However, I can only speak to what I have found works for me, and dividend investing works for me. Most of you would have seen me sharing my dividend income on a month-by-month basis or annually on this channel. So I know that there are different ways to benefit from investing in the stock market, but that is largely driven by your goal for investing in the stock market. And I determined that dividend income was the way for me to go. So I can only speak with conviction based on my experience over the last 4 years, and I am excited and encouraged by the progress I have made so far. Which is not to say that dividend investing is for everyone. Now, because I tend to focus on quality dividend paying stocks, blue chip stocks, or dividend aristocrats, my total return is not just limited to dividend income. In fact, my dividend income only constitutes less than 25% of my total returns. About 75% of the returns on my portfolio is from capital appreciation, if you can believe it. I even hold a few non-dividend paying stocks because any rational investor would focus on total returns of a portfolio. Just because I share my dividend income on this channel doesn't mean that I focus on dividends to the exclusion of total returns of my portfolio. I think it's important that we should all set our goals and that whatever our portfolios shape out to be, they should generally support our investment goals. And my investment goal is to create a new income stream that will ultimately replace my employment income. Now, in addition to what I've already shared, here are other advantages and benefits of embracing the dividend strategy. Number one, dividend investing is a steady and non-cyclical investing strategy in the stock market. This is what I mean. If you invest in good quality dividend stocks, regardless of whether the market is up or down, you will continue to receive steady dividend income. In fact, you will receive growing dividend income into the future if you invest in great quality dividend stocks that steadily grow their dividends. Dividend aristocrats and dividend kings, for instance. Here, let's watch a small clip that will clarify what I'm trying to say.
But why this works and who it works best for.
So to be really clear, it is not for everyone, right? Most people don't need income. But if you do need income, it works really, really well. And that's a pretty niche strategy. Like sometimes it's a retiree, sometimes it's just someone who likes to see some component of their total portfolio rolling in day after day. At least in my case, most of my clients don't have 100% of their portfolio in the dividend income strategy. So they're not missing out on an Amazon or Microsoft. It's just different silos. And frequently people use it, again, for that silo to replace the income or to diversify their overall portfolio. You know, when we let in and we said, investors are looking towards 2025 as a good year for dividends. I think the reality is, and this sounds silly, but I think every year is a good year for dividends. In addition, you have a tax-advantaged income stream. If you buy treasuries or corporate bonds, you've got an ordinary income tax. Dividends, you're getting a 15% or 20% tax rate on them. So you have all these wonderful things going for you. But
next, dividends also form part of your portfolio's overall return, whether it's just cash receipts that you let sit on your portfolio or cash dividends that you receive and reinvest in your portfolio for exponential growth. And this is very different from growth investing because when you invest for capital appreciation, the value of your stocks may grow, may increase, but that is tied up in unrealized gains until you sell your stock. While if you're a dividend investor, every quarter or every month, you will receive cash dividends either in your account so that you can withdraw it if you wish, or as a drip if you set up a drip so that the cash is reinvested in the position. So dividends form part of actual portfolio return in real time, and they provide actual tangible income that you can withdraw and use to cover your expenses. So when you invest in dividend stocks, the cash dividends you receive is real, actual money. It's not some unrealized gain or speculative gain that can be erased if the market had a downturn. So that's the other benefit of investing in the dividend strategy. Last but not least, dividends reflect the true performance of a company and not just speculation or market sentiments, because in order for a company to pay dividends, they need to have made revenue and made a profit in order to share that profit with their shareholders. So by investing in a dividend-paying strategy, you are investing in profitable, well-performing companies, because only financially healthy companies will have the excess profit to pay out as dividends to their shareholders. So in principle, dividends reflect the financial health and the financial strength of a company. So that is my case for the significance of dividend investing or investing in dividend-paying stocks. What do you think? Are you a dividend investor? Do you hold any dividend stocks? Let me know what your position is on dividend investing down in the comment section below. Anyway, I hope you enjoyed the video and found it helpful. If you did, please consider liking and subscribing, share with family and friends. I'll see you in the next one.